Hi everyone, hopefully people like the two trend trading videos and a few of you have done some testing on it. I just want to delve a little bit deeper now into what is actually going on and which elements of the strategy are important and which are just there for structure. Okay, so if you run some tests on this, you'll quickly realize that what direction you pick for the trend is pretty arbitrary really, and it doesn't actually, there's no edge in it. The only time that an edge appears in it is when you get consecutive days in the same direction. Okay, but if you go through the days of the year and add up how many consecutive days you have and how many days you get where it changes, you'll probably come out that it's around 50% of the time. Okay, so it goes in the same direction the next day as often as it goes in the opposite direction. And also you'll probably notice that really, if price closes down for the day and you were set with a direction to buy only, it doesn't necessarily mean you're going to have a losing day. Okay, it depends where the entries come. So say for instance, let's imagine we were only selling on this day that closed up strongly. Okay, your first sell order just happens to be at the high of the day, and then it goes on to run to 4-to-1 risk to reward anyway. Okay, so you had a winning day even though your trend direction was opposite to the direction price actually traveled for the day. Okay, so this starts to make you think about trend trading as a whole and which are the elements that are important. Okay, so to expand on that and kind of make it a bit clearer, what if you went through and did a test and did both directions? Okay, so you did this day with only buys, okay, and then you did this day with only sells, and you run tests on those. You quickly realize that the direction doesn't really make any difference. It's the fact that you're hitting a consistent number of 4-to-1 risk to rewards. Okay, and the style of entry means that you're always going to secure those swing points, and those swing points are the ones which are most likely to go to 4-to-1. So you're just putting yourself in line to hit enough home runs that over the long run you're going to make profit. Okay, in my mind that is what an edge is. And what you find is that if you trade only long on a day and only short on a day, then you're actually trading my original high-low system anyway. Okay, so the trend trading idea is just essentially one half of my previous strategy. Okay, and this does kind of make you think about trading in a slightly different way, especially if you've come from a sort of analytical approach to trading, or something, say perhaps with price action. So let's just do an example to explain that in a bit more detail. So let's say whatever tool we're using to pick the trend has decided it's long for this day. Okay, and then we'll use the same entries that I've been outlining. So this would be your first long. Price comes down and stops you out, so that's -1R. And this would be your second long. Okay, and you don't get stopped out on that, but it doesn't go to 4-to-1, you get stopped out over here. Okay, so if the trend was long, you lost 2R. Now let's say on the same day the trend was short. This would be your first trade short, and eventually over here that goes to 4R. So shorts 1 4R and longs 1 -2. So if you traded both trends at the same time, you'd still come out at a net positive +2. Now the question is, can you run that all the time and not have a trend direction, just go long and short and make profit over time? That's the question. That's my original high-low system. You're basically playing both trends at the same time. So, I'm not saying you want to go and trade that way. I'm not saying that the trend way is better. Neither way is better. It's all down to what the market moves like, and it's down to your exits. Okay, it might just be that you have 3 months where all of your trades that would have normally gone to 4 to 1 go to 3.5 to 1 and reverse and stop you out. In which case, you would have been better having a move to break even at 3R, say. That would have performed better over that period. Okay, but you just want something that puts the probabilities in your favor that over the long run you're going to make money. And that's all you can really do with trading. People might argue that you can do analysis and you can beat that. You can add an extra edge to that. Yet to be proven to me, yet to see any evidence of that. Whenever I see people that profess to that and I look at the system, I can see really it's just market movement and the fact that they had good money management, good exit and a good exit plan that really made the difference. Okay, but it's nice to have that belief that you're somehow in control of your results, and if you want to trade that way, then by all means go down that route. I'm much happier knowing that really I've just got an edge and I need the market to play along to a certain extent. Okay, and obviously you build your edge around something that's more likely to happen than not. Okay, it doesn't mean you're not going to have 2 or 3 months where it just doesn't work out. And that's it. I mean, is 4 to 1 the number, or is it wait till 3 to 1 and move to break even and then trail? I think that would probably make more money over time. Is it 6 to 1? Is it 8 to 1? Is it 10 to 1? It certainly is in the higher risk to rewards. Okay, if you want to make big money, okay, you're going to have, you compare it with say 2 to 1 risk to reward. Okay, you're going to have a lot less bad times. But when things are really in your favor and luck and the market is moving the way you want to, the money you'll stack up with these larger risk to rewards, 4 to 1 or more, okay, will more than compensate for those few more bad periods you have. So, that's all I want to do today, just to kind of get you thinking about this whole concept of, get thinking a bit more deeply about what the important elements are in a trading strategy and what's going to make you money in the long run. And, we tend to lead, our brain tends to lead us down the route of cause and effect, like, the filter you're using to pick the trend is the element that's going to make the difference, or the particular candle shape when you enter is going to make the difference. I mean, if you're heavily into price action and candle patterns, run some of these tests on the trend trading one and mark out the candle shapes and patterns that are the winners. Okay, and you'll find you get weird stuff like this, just like a weird inside bar in a load of mess, not particularly strong down, no particular sort of wick pattern. They're just kind of random shapes. Okay, and that will help you consider your entries and how important they are, especially when it comes to candlestick shapes. All these little exercises will help you along the way to really kind of focus in on what elements make a winning strategy and what elements are really just there to pander to to our psyche and make us feel like we're somehow being smart or insightful or reading the market. So I hate people saying reading the market. You can, yeah, I'm not going to go any further on that thought. So that's it. That's the third video. I'm going to do a few more of these because it's a really good way of demonstrating some important ideas. So yeah, hopefully a few of you will do some testing on the trend trading thing and come up with some interesting stuff. I did have a look at moving to break even fairly quickly. I have found that although in this example here, this one probably goes to about 2.5R and then does eventually go on to TP, but I did find that once it's gone like about 3R, if it does come all the way back, then it's you might as well have moved to break even. So that is something that can be used. I know I've not really covered it in the first video. The one thing I have found is definitely don't move to break even quickly. That just really stunts your profit when the market is perfect. So that's it. Enjoy the weekend, everyone. I will see you all soon.